Welcome back. Time now for notable calls, when we take a look at what analysts are saying and doing with their ratings and target prices on high-profile stocks. Let's begin with two of the highest profile stocks in the Canadian market, the two big rail stocks, Canadian Pacific Kansas City and Canadian National Railway. There's a comparative look at how they have performed over the past 52 weeks. The price targets have been adjusted at Barclays. Barclays is the brokerage we're talking about here. The price target for Canadian Pacific Kansas City raised at Barclays by $6 to $96 US. Barclays expressing its price target in US. Barclays keeps an overweight rating on those shares. Meanwhile, Barclays has an equal rate rating on Canadian National Railway with an increased price target of $130 US per share. The analyst is Brandon Oglensky. He says transport results season should focus on improvements for railroads and challenges for truckload and intermodal brokerage operators. So he thinks the landscape favors the rails in the short to mid-term. Up next is Verizon Communications. This is the world's second largest telco company as measured by revenue. Morgan Stanley raising its price target on Verizon by $2 US to $46. There's the stock at nearly 43 yesterday, while keeping an overweight rating in place on the shares. And you can see Verizon has rallied to what looks like a 52-week high. Morgan Stanley expects a strong start to the year from a positive macro backdrop. That would be the U.S. economy and strong volume trends. The stock is up 10% year to date. As for the analyst consensus, it is in the hold camp. There are 13 buys, 16 holds, and 3 sells on this stock. Well, one of the things we've seen recently, of course, is an impressive rally quite recently over the past several months in Bitcoin. Bitcoin and cryptocurrency is something that our featured guest Greg Taylor follows quite closely. There's a look at it. It took off, began rising in mid-October, really took off in mid-January this year, and is now trading at 66, almost 67,000 US dollars per coin. Greg, the ETFs, the new ETFs in the US have been a big part of this story.
Oh, absolutely. And that's been the big thing that's really got it kicked off, as you mentioned, in October, November. That was when we really started to hear more of the tone change in the US, that there's been a lot of speculation of when the US would launch a Bitcoin spot ETF. They've had a futures ETF for a few years, and we and others in Canada have had a spot ETF in Canada for the last 3. But bringing the U.S. retail investor into the fold to be able to buy Bitcoin through a spot ETF, which really is the best way to access Bitcoin, that has been a game changer, and that's what really kicked off the first rally into January. Then we got one of these classic sell-on news as it runs into the hype, and then it kind of drops 10, 15,000 the next day, which is, we see that in every commodity. But it's been really interesting to see the volumes of these U.S. ETFs and how much that's brought into the price. And that's really kickstarted the rally as we got back to all-time highs a few weeks ago, over 70,000. And the timing is kind of interesting, because this is also coinciding with what's something called the halving. This is something that's been pre-programmed into Bitcoin code since its inception, that every 4 years they cut the rate of new coins being issued in half. And that's coming up mid-April. I believe it's sometime around April 20th. And so we're getting a kind of a classic commodity. Demand is picking up with U.S. retail involved. Supply is potentially coming down with the rate of change of new issuance happening. And we all know from Eco 101 that when that happens, price normally goes up. So we've had the price go up in response to all this. But the big thing that's going to be on the back of everyone's mind is just what happens next. Is it going to be another sell-on news that once the halving happens, we see another quick drop? And who knows? It's a volatile asset class. But I think the big thing for investors is that this is something that you have to have on your radar right now. For a while, everyone was saying, well, I'm not going to invest in it, and they didn't really need to worry about it because there wasn't a big option out there. But now with these ETFs, I think every financial planner and investor has to decide, how does this fit in your portfolio and what do you do with it? And I think it's going to fit in somewhat in this real asset category similar to gold. And we've seen what's going on with gold, and I think both Bitcoin and gold can move in the same dynamic as people are getting less favorable to the U.S. dollar and fiat currencies and looking for alternative. And I think we're seeing gold and Bitcoin both benefit from that.